Hello everyone, welcome to the weekly chart review. I'm going to start and jump into Forex right away. Um, Not really a whole lot of changes from last week to this week. I'm just going to go over the pairs that I already kind of had set up previously. And I'm still expecting a move on those. It hasn't really been a very promising September and October so far. Certain plays didn't really work out, and other plays they kind of were a little too volatile to make anything worthwhile so far. Um, Scholar strategy has been decent, nothing short of profitable still, but still not as amazing as it could potentially get to. Right? So, anyways, let's just dive into Forex quickly. AUD CAD, so as you see, it came close to my entry even at the end of last week once again, and it's still dropping. So it looks like there was a rejection off that pink EMA, which is a 55 EMA on the daily. As far as the 4 hour, you can see that there's just so many EMA shifts, it's really not worth jumping into right now. Okay, I still have a feeling that for whatever reason, this might still hit the entry mark and start going up. But I don't know. I mean, if it's only if it ever gets to this area and then does an EMA shift, that's where my entry will be. Right now, it's been kind of all over the place, so I'm not 100% keen on this particular trade anymore, actually. But yeah, we'll see how it goes. AUD as you can see right here, off the 618 in the golden zone, off a previous support, or sorry, a previous resistance line right here, where it broke through, and now it's testing it once again. Very good chance that this is going to drop, but maybe just temporarily, just because AUD is having their cash rate come out this week, and it's supposed to increase interest rates. So expect a volatile reaction once that comes out. Very likely it'll just sharply drop and then reverse right after. But as of yet, there's really no great spot for entry that I can see. Maybe off of this yellow line right here on the Fibonacci, and that'll be a good area for it to kind of wick off of and start going back up again. Excuse me. CAD JPY. There's a very strong level right here for it to kind of go up to. However, we've seen a double top form over the last few months, right? So I'm still on the daily chart. It peaked around September 13th, and again, very close to that area on October 24th. So besides that, there's really nothing of note for CAD JPY. We'll just see how it ends up playing out on the larger time frame. Euro AUD. It's been consolidating for the last few weeks, right? Right on that aqua line. So as you can see, if I zoom in on the daily, broke through, tested a few times, went back down, went back up, tested, went through it again, went up. It's kind of all over the place, right? But it seems to be hanging on to that line right now. I'm still positive that it's going to go slightly higher. Maybe it's consolidating right now based off of that golden zone, right? Except there's nothing keeping it here besides a Fibonacci retracement. Okay. Yes, the aqua line is valid, but this spot is much cleaner for an entry. So we'll wait for it to get back up to there. And of course, I mean, I'm not going to take a 200 pip stop loss on there. I'll tighten that up once I see it hit that area and then do a EMA reversal on a 4 hour. Euro CAD, same sort of idea, just waiting for it to hit that zone here. Not as confident with this one as I am with Euro AUD, because there is an institutional that it's going to be pulling back to potentially. Whereas Euro CAD, the only thing that's coming up to this area right here is just a small liquidity zone, right? And 618 retracement based off that low. Euro CHF, Same sort of idea as Euro AUD. There is, instead of an institutional, there's an imbalance, a very large one. And when I zoom into a 4-hour time frame, you can see right here, it's that big candle there, right? So if I tighten that up, that is the potential spot for the entry. And as you can see, it's still very close onto those three lines, right? So 786, the blue Fibonacci EMA, and the 50% of the imbalance, right? So there's three indicators showing me that it wants to come back to this zone. Excuse me. A GBP AUD, it's been chilling out around the entry zone, right? It hasn't really want to have gone higher just yet. And when we take a look right here, this is the high point. So if I'd be looking to take an entry, I'm going to pull this up slightly more, and that's more of what I'd be looking for, right? And I'll tighten that up to about 60 pips. Sure, 61. And the reason why I think this is because if it does make a double top, it's not going to come past the height of this one, right? So that's why I made it slightly lower. And if it does break through, then, making it a smaller lot size and a tighter stop loss. Because if it does break through and make a newer high, even if it's going to be fractional, that means that it's not going to stop. It's going to keep going upwards. So that's the only reason why I would put my entry there as opposed to anywhere lower or even higher, right? If we do make a double top, it's going to be reversing somewhere around here instead. All right, GBP JPY. So it broke through and started making new highs. So there's really nothing of interest here that I see for the moment. The only thing potentially it would be coming back down to here and going up higher, but that looks like it's going to take a while for it to return to those levels. That's about 3,000 pips off at this point, right? In order to get to there, not 3,000, maybe 2,000 pips, right? So that's why it's a very interesting setup that it had based on JPY there. And there's really nothing drawing it back down to those levels, right? The only thing would be historical, well, not really historical, but over the past several months, going back to September and August, right? So we've seen support in 3 different zones right there, 4 right here. It's a very good potential chance that it's going to hit that area once again. Right, and then when it does, taking a buy would be the best opportunity. GBP USD, this one's looking pretty good actually. It's bounced off. So I drew this up, and I told my group that I missed this one earlier on in the week. There was a very good imbalance, and look how it hit right there on Wednesday. Right, so if we take a look at the daily. The imbalance is within a 4-hour candle there, and it kind of hit off there beautifully, and now it's sitting in that zone, right? So that's why I'm expecting it to kind of go lower. USD's raising interest rates this week to 4%. Sorry, guys, I'm still sick. That's why I'm coughing like a sick person, I guess. There's really nothing to compare it to. It's been a rough while trying to get better, like weather change and then kids constantly getting sick. It's like this crap just keeps recycling itself in my household, and my voice has kind of been shot. But anyway, back to this. It is that's kind of prime entry where I was thinking, and then looking for an EMA shift. Right, probably on the 1 hour here because it already hit my zone of interest, and now it's not getting back up to that level again. So if I see an EMA shift on the 1 hour, for me that's going to be a good potential entry with a stop loss of about here. So I mean, let's say if I'd be jumping in right now, stop loss would be about 50 pips, right, as the previous high is right there. And you can see that it's being tested somewhat, but it's still going slightly lower. So good potential chance for this to keep dropping. And when interest rates come out, that's going to be where the excitement happens. So maybe if you're nervous, best to wait until that. So yeah, that's all I can really see as far as the pairs are concerned now. And as far as oil goes, right, I mean, it's still kind of sitting in la la land. Not a huge fan of entering in these particular zones. As you can see, it kind of hit the liquidity spot right here and around this area, and now it's struggling to go a little higher. But it finally crossed that 987 EMA on a 1 hour, and now it's rejecting off it. So if we take a look on the 4 hour, right, and that's the 233 EMA that I have right here. And judging by this candle pattern, it's not quite engulfing, but it is very close, and both lines are going through both candles. So that's a good sign that this wants to continue its upward momentum. All right, and that's all I got for this week on Forex, guys. Tune in next week for more. Hopefully by then there's going to be other setups that finally have come to fruition, so to speak. All right, see you then.